Today, I'm going to discuss 5 critical factors to keep your investments safe. These 5 points are what I use every day to make my own investment decisions. And I pull back the curtain and give you the exact percentages of how I keep my portfolio diverse, no matter what the market conditions are. You'll want to watch to the end to get my one strategy that is so simple. Yet most investors forget this golden rule. This invaluable information is coming up next, here with Mark from Crypto for Seniors. Did you know that nearly a third of Americans approaching retirement have less than $25,000 saved? And some 52 million workers here in the United States work for employers who don't offer any type of retirement. They're employees who will end up living next to poverty levels trying to pay their bills with only Social Security. That is, if Social Security will even be an option in the coming years. That's a scary thought, isn't it? Some think jumping into cryptocurrency will fix everything. That's like throwing a lit match into a fireworks factory. You need to protect your future. Let's talk about the 5 biggest crypto mistakes retirees make. We're going to start with the most fundamental rule of investing, one that applies whether you're buying a stock, a bond, or yes, even a cryptocurrency. Do your homework. Understand the basics thoroughly. What problem does this particular cryptocurrency solve? Who's behind it? What are the risks involved? Go to the token's website. If they are legit, they have a website. Read the white paper. Is the management team listed by name? Do they have experience in crypto projects from other projects? Finally, never, ever invest unless you have the disposable money you would be willing to lose, because investing into stocks and crypto can be risky investment for those who have not done their research and are following so-called experts. Investing is not for the faint of heart. Slow and steady works sometimes, but you have to be flexible to jump when the market conditions are critical. You've heard it a million times before, diversification is key. It's not just a buzzword thrown around by financial advisors and investors. It's a fundamental principle that can make or break your financial future. Diversification means spreading your investments across various asset classes to reduce risk. By not putting all your eggs in one basket, you're protecting yourself from the unpredictable nature of the markets. Just like diversification means a person is more well-rounded. Often they are a happier and fulfilled individual who has the tools to focus on what's under their control, but can calmly make minor corrections or changes to different conditions as they evolve. This is true for any investment, but it's especially important with something as volatile as cryptocurrency. Cryptocurrencies can experience dramatic swings in value within a short period. One day, your investment might be soaring, and the next, it could be plummeting. This volatility makes it crucial to diversify within any investment class, and crypto is no exception. Imagine putting all your retirement savings into a single crypto because the internet says it will 20 times this year. You wake up tomorrow and find it plummet overnight. Was this a rug pull or an uneducated investment? The emotional and financial toll can be overwhelming. Investing into crypto can be unpredictable, and even the most stable companies can face sudden downturns due to market conditions, regulatory changes, or unforeseen events like manufacturing delays. Diversifying your investments across different sectors and industries is about the only way to help mitigate these risks. The crypto market is still relatively young and can be influenced by a variety of factors, including regulatory news, technological advancements, and market sentiment. Look into different types of cryptocurrencies, such as utility tokens, security tokens, or consider stable coins if the market is not in a good position for your money. Each type has its own risk profile and potential for returns. By diversifying, you can balance the high-risk, high-reward nature of some cryptos with the more stable, lower-risk options. Just as a mosaic is made up of various pieces that come together to create a complete picture, your investment portfolio should be composed of a variety of assets. This can include stocks, bonds, real estate, and of course, cryptocurrencies. Each asset class has its own set of risks and rewards, and together, they can provide a more stable and secure financial future. Take me, for example. My wife and I have, I just looked it up to give you exact numbers, 33% into stocks, 27% into crypto, 21% into annuities, and I have an I Trust crypto-based IRA with 19% invested into crypto separate to my other crypto holdings I use to actively trade. A diversified portfolio is the key to weathering those inevitable market storms. By spreading your investments across different asset classes, you're not only reducing risk, but also increasing the potential for returns. Diversification allows you to take advantage of the growth in various sectors while protecting yourself from downturns in others. It's a strategy that has stood the test of time and remains one of the most effective ways to build and preserve wealth. If it sounds too good to be true, it probably is. Scammers are like sharks circling, waiting for someone to make a mistake. Seniors are often their favorite targets. I recently released a great video about 4 different types of scams, and with each one I tell you exactly how it happens so you don't make the same mistake. You might get an email promising guaranteed returns, a phone call from a fake financial advisor, or see ads for crypto investments that sound too good to be true. They always are. Be wary of unrealistic returns or pressure to decide quickly. This could be what is known as a bully scam. Never give your personal information to someone you don't know and trust. Even if the person calling claims to be with law enforcement, ask for a phone number, verify it is correct, and call them back. Trust me, you will thank me for that tip. Works every time. Don't let your emotions rule your investments. Once you fully understand your investment and all of the risks associated to the purchase of the investment, then, if you're willing to accept the known risks, well then, you have made an informed decision and taken emotions or hype out of your decision. And when it comes to something as volatile as cryptocurrency, those highs and lows can be even more extreme. FOMO means fear of missing out. FOMO can also mean fooled out of money often. Fear, in and of itself, is built into our DNA, and it is intended to alert us to be wary and go slow. In slowing down, you start to remove emotion, which can often cloud any investment decision. That's why it's so important to have a plan and stick to it. No exceptions. A well-thought-out investment strategy can help you navigate the turbulence and stay focused on your long-term goals. Emotional reactions can lead to impulsive actions, which often result in poor financial outcomes. It's easy to get caught up in the hype, to see the price of a cryptocurrency skyrocketing and think you're missing out. This fear of missing out, or FOMO, can drive you to make hasty decisions and often end up in rug pulls, meaning the project wasn't real and you just lost your investment. Practicing mindfulness and stress management techniques can also help you maintain a clear head. Taking a step back, meditating, or even going for a walk can provide the mental clarity needed to make sound investment decisions. Consider different sources of information when doing your due diligence. Additionally, seeking advice from financial advisors or attending investment seminars can provide valuable insights and help you stay grounded. Surrounding yourself with knowledgeable individuals can offer support and guidance. We have already talked about diversifying your portfolio is another key strategy. And here, it is so important to your financial well-being. Remember, investing is a marathon, not a sprint. Setting long-term goals and keeping your eye on the bigger picture can help you stay focused and avoid being swayed by short-term market fluctuations or potentially bad information. Don't forget about Uncle Sam, taxes. Nobody likes to talk about them, but they are an unavoidable part of life, especially when it comes to investing. And yes, that includes cryptocurrency. The IRS considers cryptocurrency to be property, which means you could be on the hook for capital gains taxes when you sell it for a profit. Talk to a qualified tax advisor who understands the ins and outs of cryptocurrency taxation. The last thing you want is to end up owing the IRS a hefty sum because you weren't aware of the rules. Protect your future. I know we covered a lot of ground today, but I want you to remember this. Protecting your financial future is crucial, especially as you approach retirement. It's not just about having enough money to live on. It's about ensuring that you can enjoy your golden years without financial stress. Think about the lifestyle you want to maintain, the places you want to visit, and the experiences you want to have. All of these dreams require careful planning and smart financial decisions. By avoiding these 5 common crypto mistakes, you're taking a huge step towards securing the comfortable and happy retirement you deserve. Cryptocurrency can be a volatile and unpredictable market, and making mistakes can be costly. But with the right knowledge and strategies, you can navigate this landscape more safely. Remember, it's not just about avoiding losses. It's about making informed decisions that will help your investments grow over time. Now, I want to hear from you. Have you ever made any of these mistakes? Sharing your experiences can help others learn and avoid the same pitfalls. It's important to create a community where we can support each other in our financial journeys. Your insights and stories are valuable, and they can make a difference for someone else who might be struggling with the same issues. What steps are you taking to protect your retirement savings? Are you working with a financial advisor, diversifying your investments, or perhaps setting up a budget to manage your expenses? Share your thoughts and experiences in the comments below. Your strategies might inspire others to take action and make positive changes in their own financial planning. Remember, your retirement is worth fighting for, and I'm here to help you every step of the way. Whether it's through providing information or simply being a source of encouragement, I'm committed to helping you achieve the retirement you dream of. So, let's work together to protect your future and ensure that your retirement years are filled with joy, peace, and financial security. Bye for now.